I have a leveling up agenda to make you a better trader, and it's all part of a bigger plan to build the greatest group of traders that have ever existed and change the world around us. I know that we come from all around the world, so it's only right I go and visit you. And today I'm doing exactly that. So call me Phileas Fogg and suck my big fat Scottish, because here we go into the charts to talk about the mineral companies of Australia and the top companies on the ASX. We'll also cover the Australian dollar. That's the currency, the stock market, their most well-known sector. Hit the like button, throw a shrimp on the barbie, get your pool shoes on, Sheila. This is gonna level up down under. The Australian dollar weakening in its most recent trend against USD, weighed down by a very hawkish outlook at the Federal Reserve. There is a policy meeting from the Reserve Bank of Australia coming up where we anticipate 50 basis points being added to combat recent inflation, itself down to 6.8% in August from a record high of 7% in July. Some questions then on the Australian dollar. Are we approaching a low? How quickly might we get there? And should there be a reaction when we reach these next support levels? What might that look like? I've got some boxes on the screen there, which you're perfectly welcome to take a look at. Rewind. Let me know what you think of those targets in the comments below. And we're going to now talk about some of those large mineral and mining and energy companies, what Australia is so very well known for. And we'll start with AGL, one of Australia's largest energy companies, who are targeting a move away from coal-fired energy generation to more sustainable energy production 10 years ahead of schedule. They're looking to move away by 2035. Let's see what that's likely to do for share prices according to the charts. Weekly time frame, lots of confluence at 150. If you were trending in that direction, I'd expect you to test down at less than $1. In the meantime, you've got a 236 to recover at 6.91. If you do, you could head to the top side, meet the 200 period moving average, a golden pocket retracement, a 382 from a previous fib, and then lots of other areas of confluence along with support and resistance on price action. So aiming for $13 possibly. Drop down to the daily time frame. You can see there's a flash 8.152. That would be in line with the downward sloping trend line, and our 886 recovery from that high to these lows might be in around these levels. Yes, test that back above the golden pocket 886 retracement. Test that flash. 4 hour time frame. 50 simple providing resistance, 236 at this stage. You recover this, head for the targets back to the top side. It could be a positive move. You've got bullish divergence, an inverted head and shoulders, and if you did take the implied target, you would at least head to that 200 period moving average, the 7.95, $8 sort of range until this first flash and downward sloping resistance. It looks like you're coming back to these targets, and on the monthly you're going to have a death cross here, so you'd come up and test that. That's not all that crazy. Top side be the $12 targets. If you did move there, I would expect that to be extremely risky from that point onwards.
Federal scientists are working around the clock to probe its secrets. Once we understand the bug, we will defeat it.
Pilbara Minerals, who've just achieved record prices for their hard rock mined lithium at auction. They're the largest producer of hard rock mined lithium in the world and have just upped production of their coarse spodumene from their Ngangaju plant in their Pilgangoora lithium operation in Western Australia. Let's see how the charts look for their prices. We've got bearish reversal divergence on the top, bullish continuation divergence on the bottom, and we're looking to our Fibonacci's for confluence. You can see that a retracement back to the prior high within the previous formation would be the 236 from this most recent thrust up. You don't hold that, you'll head to the 200 period moving average on this time frame, confluent with the golden pocket. If that doesn't hold, 886 retracement, prior low support in previous price action, then that breaks 1618 extension. And again, historical support and resistance. Not divergence on the top side, a bit of continuation divergence on the 4 hour. May well push back up again then, if that does happen. First target 5.06, second target 6.02. Careful though, if it breaks the 236 below, looks like it could break down a considerable chunk.
Join the mobile infantry and save the world. Service guarantees citizenship.
Back with some more lithium, and now it's the Big Daddy CXO Core Lithium Limited. Holy moly, Jackanory, this is a double or potentially triple top with bearish divergence and a failure swing. You go through the center line, you've got your confirmation. You're at the 50 simple on the weekly time frame. On the daily, you're at the 200 and a golden pocket retracement. If you do bounce, 50 simple back above and a 236, likely providing some level of resistance, a little bit of a gap there perhaps on some time frames. You could easily target that level on a retracement that fails and then fall back down below this 200. You've got your 1.13. That doesn't hold at 0.755. Go to the 1618. You'll bounce at these levels and others between them. But overall, there's a flashback on the daily down at 0.25 or so. That's 80% off price. Very, very dangerous when you've just put in a double or triple top and you've got a failure swing. If this thing retraces, nightmare on the cards. Could easily be a good short position, but manage your risk with a stop loss and be careful for those retracements ahead of time. Trading coal stocks in 2022 is much like making love to a beautiful woman. This particular beauty is hugely overbought. If we take it from the low to the high, a 236 retracement at this stage comes in on the weekly time frame confluent with our prior low and approximately where we find our 50 simple period moving average. So very significant resistance and a bounce from this area led to the takeoff. A lot of confluence at that area. If we drop down to the daily, we can see then 200 is above that, 50 simple way above, and as price action positively responding to that most recent bullishly divergent low and a bounce off the center line. It's that which causes us to now be in with another failure swing on the daily time frame. You'll get confirmation if the RSI drops below the center line now. That might be when price action pushes back towards this 50 simple period moving average. Keep an eye on that for violent moves. 4-hour time frame, lots of bearish divergence, then continuation divergence at the most recent low and a bounce off the bearish control zone, but also, again, a second high, bearishly divergent. This thing looks very, very dodgy. If it doesn't explode again to the top side, then it's coming down. And like that on the weekly time frame there, you can see it. It's very much overbought. So we'll see. Easy peasy, come back down again. These important levels. It's hard to rule out $4.
Everyone's doing their part. Are you? The war effort needs your effort, at work, at home, in your community.
That was Whitehaven Coal. Here we have Yang Coal, where you can see price action has made a move from its ultimate high to this ultimate low, a 236 retracement. That was very important for price action as support historically and then subsequently. We've come into this tightening wedge formation, which may lead to a breakdown. If you push another leg higher, though bear in mind you're already bearishly divergent on this most recent high, then you could come up and close the totality of the golden pocket and test this prior resistance level. Could though break down in advance of that. You've already tested the bottom side of the golden pocket. This is the trend line to hold. If you don't, you'll come back down. If you push back up, there's your implied target. Takes you to a 50% retracement back from the golden pocket. That would be natural enough. Down to the daily time frame, you can see you've got these gaps below there. It may well be that you have to pull out of this formation and then go way beyond that particular implied target to fill these gaps. You certainly would. Prior high within the prior formation, or perhaps it's within this guy, would be in at around 338. If that doesn't hold, you'll come back and fill the bottom side of the biggest gap there down at $3, 2.99. That's the breakdown targets. If you push back up, your first target above in around 8.85. That's Yang Coal. Not bad, but possibly terrible.
The bugs send another meteor our way. But this time, we're ready. Planetary defenses are better than ever.
Part 2, we've got the top 10 stocks in Australia, many of which are banking stocks, so we've got a particularly interesting segment on that. But so stay tuned. Hit the subscribe button so you don't miss it. Hit the like button so I know to do more of these. And if you want to choose the next place that Phileas Fogg visits in his unreasonable balloon, get onto my Patreon, www.patreon.com/tradespotting, and there you can let me know and vote on the next country or any stock where you are you'd like me to look at anytime. Links below for the fax machine. Thanks very much. See you.
Klendathu, source of the bug meteor attacks, orbits a twin star system whose brutal gravitational forces produce an unlimited supply of bug meteorites in the form of this asteroid belt. To ensure the safety of our solar system, Klendathu must be eliminated.